Hey Trade Pros, this is Mark from TRADEPRO Academy, and in this weekend's video, we are going to discuss Confluence in trading, how you guys can use Confluence to identify strong levels of support and resistance that you can lean on in order to find good, high probability trading opportunities. Now, before we jump into the video, if this is your first time on our channel, welcome. If you're a returning viewer, welcome back. For the newer members of the channel, if you guys can go ahead and take a moment and subscribe to the channel, make sure to check off that notification bell to get notified anytime we go live or anytime we drop any new content. In addition to that, please feel free to smash that like button if you're liking what you're seeing. That's really going to help us out with the YouTube algorithm, and we really do appreciate that. So with that out of the way, let's jump into this presentation. All right, Trade Pros. So what you see in front of you here is a chart of the Euro US dollar pair, and you guys can see three charts here. The one on the left hand side is the weekly time frame, the one on the top right is the daily time frame, and the one on the bottom here is our 4-hour time frame. So what is Confluence with trading? Before I show you guys how to actually identify these levels, what you want to understand first is what Confluence actually is. So from a technical analysis perspective, we like to use tools such as price action, such as potential indicators, moving averages, Bollinger Bands, Fibonacci retracements, etc. So whatever tools you have as part of your strategy, you're essentially going to want to take or look to qualify trades at levels where a majority of these tools come into confluence with each other. So let's say you have a strong price level at, let's say 1.10800 that you've got overlapping with a Bollinger Band, for example, and maybe a moving average. That level can be relied on a little bit more than a level that doesn't have any confluence, right? If there's a single swing point in the market, that's great, but what can make that swing point a stronger level of support or resistance is if in addition to that swing low, maybe you have a Fibonacci retracement level, the 50% to 618. Anything like that, that's going to give you the confidence to lean on that zone. So what you guys see in front of you here is the Euro USD chart, and I'm going to walk you guys through a quick level here that we used with our team this week, and I'll show you guys exactly how we came to that level. So what I want to show you guys first is I'm going to extend my daily chart here, and the first level that we kind of really liked going into this week was this 1.108 region here, and the reason why we like that is because it was a key flip zone here on the daily time frame. And what is a flip zone? Well, that's simply a level that's acted as support and resistance in the past. So if I draw out a little box here, I'm going to show you guys really right here is kind of the level that we had as our flip level. You guys will notice that we had a low, support, resistance, resistance, support. We broke through that, and on the retest, that should act as resistance. So Confluence number one, we have a key support and resistance flip zone at that level, right at the 1.10800. All right, guys. On top of that, what we like about this is that there was a nice double top before that breakdown, nice strong breakdown as well. So that is kind of your role reversal play. That's the first reason why we like that level. All right, and so if I drop this thing down into our intraday time frame, this is where it gets a little bit more interesting now. So if I measure out the retracement here on the Fibonacci from the high of this move to the low of that move, what you guys will see is that the 50% retracement level lines up right around our zone within a couple of pips. So that is Confluence level number two. So we've got right now a key daily support and resistance flip zone. We've got number two, we've got the 50% retracement of this impulse leg from the highs here to the lows down below 1.10. All right, so that is two levels of Confluence. And we don't use this personally, but it plays out with this actual example here. Let's say you have a Bollinger Band as part of your strategy and you're looking to trade fake breakouts. So what you've got here right around our our region as well, look at that. We've pressed above that Bollinger Band once. We had another press above that Bollinger Band and a nice wick to the upside. So that is 3 factors of confluence. At this point, we have the strong daily flip zone. We have the 50% retracement of the Fibonacci from the impulse move that led us lower here. We also have the upper bound of the Bollinger Band. We have a rejection right there. And on top of that, what you guys will see on this 4-hour time frame is that we've had a fake breakout of that range high, and we've had a reversal close lower. All right, and so that makes 4 levels here. That's 4 factors of confluence right at this one level, and that is a level that you can lean on. And this is actually a trade that we took with our FX team here. Once we had that 4-hour close back below those opening, rather back below that previous resistance top here, that's where we got short, and we're looking to run this guy back into these 1.10s. But I hope you guys enjoyed that example. That is what Confluence is in trading in technical analysis, and how you guys can use Confluence to identify those strong levels of support and resistance that you can lean on in order to qualify trades, exactly as you saw in this example. So I hope you guys enjoyed this one. If you did, please make sure to smash that like button. And if you haven't had a chance to yet, please make sure to subscribe to the channel and check off that notification bell to get notified anytime that we go live or drop any new content. Until next time, guys, good luck and good trading. Take care.